What is going on YouTube? It's Brendan from Market Makers. Welcome to the show, everybody. This is Market Mayhem. You guys like that? You like that thumbnail? The market's reacting today, the equities market specifically, the way they should have acted yesterday after Powell gave his most hawkish speech since Jackson Hole back in August. This is like Jackson Hole 2.0. Not only did Powell say we're going to raise the terminal rate to 5.1, he said I think 7 members actually want the terminal rate up at 5.4. So the market hasn't priced this in at all. We have a yield curve inverted, the deepest inversion all the way back overall for the yield curve to like 1981, I believe. So that was back in the Paul Volcker days, guys. So what are the markets doing? Well, they sold off today. The Dow went down at one point, I think over 950 points, finished down about 700. Bitcoin's holding up a little bit better. So let me paint the picture of what I think is going to happen. Now, you guys know the talking heads on TV, all they've been talking about is a Santa Claus rally. I told you if and when that rally comes, it's going to be capped. And we have clear caps in the equities with the 50 weekly moving average in the case of the Russell and the S&P, and of course the Nasdaq can't even reach the 200 yet, right? So the question is, the question I guess I should say is, will we rally between now and the beginning of next year? That's the question, right? The Santa Claus rally. Because you guys know my premise. My premise is 2023, deep, dark recession. Everything you want today will be cheaper next year, okay? Deep, dark recession with a financial crisis. That's my baseline. That's my baseline for next year. This is going to resemble '08. It's going to resemble .com. And the people you watch on TV won't get it until it happens. I saw Jim Cramer yesterday on CNBC saying he doesn't see 2023 as a bad year. You know, I don't see it as a bad year. The Fed itself actually still sees like spot 5% growth for next year. So they don't want to say it's a recession, but that's what's coming, guys. We did 425 basis points in hikes already in a single year. Trust me, the yield curve, this inverted, 82% of the yield curve inverted. 100% of the time back to 1955, you got a recession. So at a minimum, you're looking at the S&P going down 35%. And in financial crisis, it goes down 50% plus. Okay, so we know Bitcoin's going to get cheaper. We know equities are going to get cheaper. But what I want to focus on in this market mayhem is have we held the structures for the market to wave up to a target to really like just slam on an epic short? We have patterns on Bitcoin, Dante's Descent. I went in depth on it on Sunday's video. If you guys want to see that, go check out that video. It's called The Big Short. And I have the same pattern on the Russell, guys. I drilled it down into the daily on the Russell. So I'm going to share with you what I have, what I want to see for a big short on a large time frame. And we're going to jump right into this video, guys. This video is going to be brought to you by BITGET for all the cryptos. You can support our channel by visiting our sponsors. If you're going to trade, definitely check out these platforms. Link in the video description, SimpleFX to trade these equities, commodities, and Forex. Link in the video description. Our sale ends in 2 weeks, guys, for our Discord. $20 to join. Download Discord, click the link, come get live streams, TA, 13,000 people on the Discord, and a whole education section. And guys, I feel obliged to say, but everything in this video is for entertainment and education purposes only, and all of you should know that. If you do trade responsibly. Let's check out Bitcoin. So we have this pattern. We're not going to go into it because we've been over it now in a couple of videos. Dante's Descent. The reason, guys, I want to see this pattern play out because we have this pattern coming out to January 3rd. So I want to see this pattern play out because this gave that trade. I gave you this trade at 48.2. 64% decline in the market. We got this trade right here as well, 28% decline in the market. This pattern has been 100% effective. So whether Bitcoin waves up or down, it's telling you it's going to make a top on January 3rd. We even got the pivot point from that pattern prediction, right? The pattern prediction, the projection within the pattern got that 28% trade. So I want to see this play out. And let's go ahead and look at Bitcoin zoomed in on the daily time frame. Let me lay this fib out for you because I know a lot of you like to mimic these charts so you can practice, right? So with all the mayhem in the markets, and we're going to look at equities, guys, Bitcoin still has its uptrend. You can see that with a simple trend line. Yes, you're pulling back, but just like in this uptrend, you get big pullbacks, okay? Now, don't mistake what I'm saying for bullishness. Remember, price moves in waves. You can see this just in the behavior of price. It goes up, it goes down, it goes up, it goes down, it goes down. Now we're in that up wave, okay? Can that up wave take us to this 48.2, not 48.2. Now I sound like a different YouTuber. Can this take us to meet the 200 at around 20,700 or the 233? And that's what we're efforting here, because let me flip back to this chart. If we throw on the 200, let's just do that so you guys can see this. We haven't hit this since March. Look at this. Right where the pattern, right in that 20 bars on the weekly pattern. Here it was 138 bars, but right where the pattern, that was your pivot, hit that 48.2, 64% drop, okay? And this may be the first time we touch it again all the way back since March 28th. Unreal. So looking at this, let's lay out our fibs, guys. Let's get our trend-based fib. I'm going to do a trend-based fib. I'm going to do a projection. Let me turn my magnet on. From that base to your swing high, where that pivot was, down to your low, okay? So you can see what we have here is our uptrend. You can see we kissed to the penny the 382 at 18,385. And actually on BITGET, this was 18,368. So within $20. Still really good. And if you look at this uptrend, you haven't even come back to test the trend line yet. This is a very bullish uptrend, very bullish with a small b, guys. This is a counter trend move. The primary trend, it is down. Okay, I think quite obviously it is down. So we have fib targets. Well, what does this mean? Do we have any patterns? Just because you have fib targets, does that mean anything? We got to look at our patterns that present themselves. I'm gonna do some triangle trading with Kepler's triangles. Look at that beautiful ratio, 1:272, key Kepler ratio. And if we come up to this, guys, I showed you guys this in last video as well. My targets I'm looking at really start at the 486 at 19,179 here on the January 3rd date. Up here, 618, 20,187. I think this is highly likely as well, because look at the ratio of my Kepler triangle. It gives you 43, which is, basically 46, right? And that's a key ratio, 46, 786, 1272, very key ratios in the triangles. And if you come up to here to the 786 level, you're at 618. Phi, you guys know that. That is the golden section in Fibonacci. And then, of course, you have the 786 up here at the 100% retracement. This would be like my holy grail trade. I'm not suggesting that Bitcoin's going there, guys. I'm just saying if it did go here, it gets above the 200, meets the 233, and if it can do that by January 3rd, be very, very exciting for that to happen, because I do believe this will be another topping date. Whether we top out at one of these lower levels, I think I'm really looking at, because of the ratios, right? Always looking for that harmonic marriage of the vibration of price. And if you look at this, the 486 meeting the 618 on the fib retracement at 20,187, I think that's a really realistic target if we keep this uptrend going and you have the 200 curling down, right? Always looking for confluence, and the level just above that as well, making you a 618, the golden section here on the triangle. So, these are the two targets I'm focusing on the most. Intermediate, but I would love to see that 23,103, and it is possible. Okay, it definitely is possible. And if we go ahead and click this, let's open this up. Part of the reason we got this trade as well, we did have that pivot date, which nailed the candle, the predictive nature of Dante's Descent, but we also had bearish divergence on our volume weighted RSI, the money flow index, right? One of our custom indicators in our room. And we had this bearish divergence, posted that trade, talked to you guys about that trade, and that's all good. And we have the ATR is also coming down, so we should be bottling up some more. We still have that move coming in Bitcoin, and you can see it is bottling up here on our Caterpillar. So we're seeing this transition up into the larger time frames. I want to see if we hold this uptrend. I think this week, well, I guess basically just tomorrow at this point, you're going to see maybe more selling or more basing in the equities. We're going to look at the equities charts. But with Bitcoin, if we keep this trend going, we're going to see a wave, an attempted wave up. All the equities, with the exception of NASDAQ, made it up to their 200 or above their 200. Some of them made it up to their weekly 50. Bitcoin hasn't touched it yet. So whether Bitcoin's lagging behind or whatever doesn't matter to me, but I want to see one of these high value targets hit with this excellent symmetry we have in the marketplace, because I do believe this will be a very rewarding trade. Okay. And if we go ahead and let's just pull a fib retracement as well, always looking for Fibonacci confluence. I mean, you can see the layover. Look at this. Again, this is how we know these are going to be strong resistance areas. Look at that. So you have the double confluence here, the double confluence here, double confluence here, and of course up here even at the 25,214, which I don't see any way possible you're going to that level, obviously. You know, it's funny, I'm making this video on a day that equities dumped, right? But this is how price moves, guys. It moves in waves. It's a market delayed reaction to yesterday's news. It's almost like the lemmings had to think about it for a day. Well, I mean, so it does appear we may go into a recession. More people are starting to say that now. It's just amazing. But, you know, the hosts on these TV shows, they still don't really view it as a base case. There's still people today, I'd see NBC on. When I say people, I mean probably the majority are still saying, oh, look, we can still rally. If you listen to Tom Lee on CNBC, of course, the perma bull, he never sees anything negative in the marketplace. He's wrong consistently. That is the key to get on these TV shows, by the way, is just always be wrong. If you're always wrong, you'll get invited on these programs, especially if it's bullish being wrong. You don't want to be bearish and be wrong. But I'm looking for a move up, guys, a wave up. You know, at that minimum, 19,192 at the 3D2, but I don't, the ratios I like here because this is such a beautiful Kepler's triangle. I really like these ratios up a little bit higher. And, down here at that 382, this is 382 on the triangle as well. That's like the bare minimum, 19,192. Bitcoin is trading at what? 17,350 right now. And you got a couple weeks to get there. Obviously, that's easily doable, but I want to see us combat that 200, the extra confluence for getting our head kicked in and then descending, right? That's what I really want to see. So let's look at Bitcoin on the 4 hour. As you can see, we did pump above the 200, 233, wicked our Wyckoff box, came back down, and it's just a retracement. But everything's still intact on this trend. Your higher lows are still all intact here. So unless we really start coming down, you could see Bitcoin just come up, maybe get that 19 number, just make a double top type structure, but we'll see. We got time. We got a couple weeks here, and we got to see if the equities start basing and holding their levels. But let's look at the Caterpillar really quickly. So you're still constricted, and then you had a little bubble explosion, and now you're starting to tighten up again. Let's bounce over to the Russell. All right. My favorite equity index to short, the garbage meme stock zombie company index. Notice the same 20 bar pattern on the weekly time frame is there. I think we're the only channel that tracks the Russell and Bitcoin together. The Russell and Bitcoin made their all-time high 2 days apart. 48 hours apart. If you notice the pivot dates, they're almost the same or they're a day apart. The August 15th date, I believe, is the exact same. March 28th, August 15th on Bitcoin, okay? So the pivot dates are extremely similar or the same. And as you can see here, you do have the weekly 50 laid on top of you like a blanket. And what did I say? I think a week or two ago now, I said, I think if we have a Santa Claus rally, we will come down and it will be down. So we'll be lower from a starting point and then rally back up, because it doesn't make any sense to me that you'd be defeating the long-term resistances, flipping key structural resistances, and then just fail. Okay, that didn't make sense to me. What makes sense to me is the price action now. Back below the 200, 233 on the weekly. Got a few weeks here. I have January, it's a January 2nd candle to do the 20 bar pattern. When we drill in, and I think the market is closed the day after Christmas, so it's like December 26th. I think that's a Monday. So, when you drill in here, let me show you this. So we have our bars, we have our pivots. And again, the reason I want to see this pattern play out, these are the same dates, notice. So when you drill in from the weekly candle to the daily, that drop, this gives you big trades, just like the Bitcoin pattern, okay? I wish I could find a pattern like this on the other indices, but I don't have it. But 23.29% drop from that one pivot. And of course, we've been trading the Russell like crazy. I day trade the Russell more than I day trade Bitcoin, believe it or not. But Bitcoin's been pretty stagnant. And this was a almost 19.5% drop. Again, so this is calling for a top here. I utilize the same method to bifurcate this box, guys. Get this box. I got that projection from the low to the high. And if you guys don't know what I'm talking about, watch Sunday's Bitcoin video, The Big Short, because it's the same methodology I use to get these projections, okay? And so using that same methodology, I'm out here at December 30th. Now that's a Friday. Now, and with the holiday, maybe that rolls you into that January, whatever that Monday would be. January 2nd, I guess that Monday would be. If it rolls you into that Monday, well, let's just look before I keep saying it. I can't pull up the calendar. I think it rolls you into that January 2nd, being the fact that there's a holiday, but that is Friday, December 30th. Now, what you need to see happen, obviously, is what? You need to see the Russell hold this structure, or it's not going to be waving up to anything, right? If it all just starts selling off from here, is it a possibility? Absolutely. The market should be going down, guys. We have bearish divergence across the MFI. We have volume picking up on the selling, okay? So, I mean, the market needs to go down to just be honest with itself, but psychological factors, I think, will kick in. Maybe not tomorrow, but next week and the following week. Those shortened trading periods, I think we're going to see a potential little wave up. Again, it could just be to resistance we already got to, so we're going to track it very closely. Let's look at this on the daily time frame and just get some projections here, because let's go ahead and take a trend-based fib. So if we take our trend-based fib from our low to our high down here, we can see exactly where we got to. The 618, 1898, 786 at 1937. That's kind of a target that I really like here, the 1937. Seems far away, but remember, these candles are having big moves, okay? And we're talking about a couple weeks out here. So I want to see if we can hold this structure. Why do we need to hold this structure? Well, let me show you the pattern that I'm looking at first, okay? So if we look at this pattern, and basically I'm looking at my chameleon pattern or a geometric Gartley pattern. You have this pattern right here, which is essentially two pullbacks, and I would be looking at something like this, okay? This would get you right at that 786 level, and, you know, this would be a really good push-up. You'd be hitting the 618 on the fan, which is giving you proven resistance already. So I'm going to see if this swings back around. We got to hold that level. Let's go ahead and get rid of that drawing. Let's get rid of this, and let's look at the actual current price action. Now, we have people, we've been trading these swings in here on these candles, but, you know, if we just take this from the 100% retracement, this impulse move up, come up here, we could be coming down to the one fib at 1759. Could totally see that. Want to try to hold the structure intact and then get that last swing to the upside in the next couple of weeks, which could happen with any type of emotion in the marketplace. Get some retracement back to the upside. And again, this would all be from lower positions, as we talked about. You weren't ever going to do this, okay? This wasn't ever going to be a likely scenario that the permabulls wanted to see happen. Regardless of what Powell did, the economy is overall dramatically weakening, and people are just starting to admit it. There's still only a few banks that even have a recession as a base case. Obviously, Jamie Dimon's JP Morgan. I think I saw Bank of America, and I think Deutsche Bank. Morgan Stanley still doesn't have a recession as a base case. I mean, that's incredible to me that you go out and make predictions and you don't even look at any of the leading indicators, the historical indicators that have been 100% accurate, and you still go on TV and say, we don't have recession as a base case. Unreal. But that's where we're at, guys, and you're in the mid-range here in Wyckoff. So we'll see. If this just keeps pulling down, then this neutral structure, I guess you would call it, here in the mid-range, this neutral structure will just break down, and you may be coming down for a down thrust and then pop back up. But if you hold this range, this 1759 area in here, and start bouncing around, I want to see a retest of these little higher levels, because that's where I'm looking for price to get back to. And let's go ahead and look at this on the daily again. Oh, we already did that. Let's look at our volatility, and let's bounce to the next chart. Volatility is starting to catch up a little bit, and you can see this compressing just a little bit. The Russell is very delayed with the compression. You only got tight a couple of times, even though you've had some big moves without being super tight. That's the other thing. You got to look at these indicators, and just judge by how tight they got before. There's not like a science to this. It's getting fairly tight here. And let's look at this. And one more thing. Let's look. One thing I want to show you on this pattern, I forgot to tell you guys. So if we look at the Bitcoin pattern, sorry to jump around on you, but you look at the Bitcoin pattern, I want to show you Fibonacci sequencing. We used to do this on the channel. Thought it was really interesting when I saw this today. If we go back here and go to your A point, you see that? Go to your A point, come all the way out to that low. 144 bars, Fibonacci number, right? This was our bifurcated box. 144 bars is where you get to. And where is it? Right there. Where are we at? Hold on one second. Did 144. There you go, 144. Oh, I was looking at the wrong number. I'm sorry. So it is 144 bars. Now you go 144 bars, Fibonacci number, and on your January 3rd date, look at your bar count. 55. Again, Fibonacci number. Does that mean it has to be on that date? No, again, it's just another layer of confluence. Looking at low to low, 144, low to high, 55. Just interesting. Going back, let's go ahead and jump over to the S&P. S&P, just very easy trend line to trade, right? So I told you I think the weekly 50 would be your top-ish, and we pumped above it, wicked right back down below it. Will we get some type of pump back up, right? That's the key here. Will we do something like this, maybe hit the trend line again, like a retest, and then fall down? We haven't done that here in the trend, as you can see. We've been testing it and then rolling over, testing it and then rolling over. So we'll see if we get that. That could happen with that year-end rally. Notice this is your 50 and your 200, and that would be a death cross eventually when they cross. But they don't talk about this on the channels, and you're seeing that in all the indices, by the way, because that would be extremely bearish, and everything will be making new lows next year. Most likely, March and September are typically the crash months and bottoming months, so we could see some escalation and price decline and maybe a capitulation in March. Maybe it sets up in April. Maybe it's the month before in February. We'll see, guys. That type of forecasting doesn't matter. What we're looking at closer focus is, of course, the actual trading. Looking at the S&P here, if we go ahead and draw this out as well, trend-based fib, something like this. And right there, look at that, one fib, 41.26, right? Just right around that weekly 50 target. So again, if we come back up, these targets are just as good because they provided excellent resistance. So 41.26, which would still, be right around that weekly 50 level, breaking back up. We'll see if we can do this over the next couple of weeks, because the Russell, I don't think, obviously, is going to be attempting any type of wave up unless these get waves up as well. Very important for the S&P, being the broader market, to hold that 50, which is just above 3860, okay? Needs to hold that 50, maybe vacillate in here. You're going to battle with the 200, 233. That might be when you see the Russell potentially wave back up. And price right now is at 38.95. Watch for 38.60 beneath you. Looking at your MFI, of course, you had volume divergence on the rallies. You had bearish divergence on the MFI. I've been telling you that for a long time. We have the ATR. Looks like it may be settling down a little bit. So let me check the Caterpillar. And it's starting to bottle up. Daily takes a long time. And let's go ahead and bounce to the next chart. Let's look at the NASDAQ on the weekly. Weekly NASDAQ, again, weekly 50 up here, 200, you just fell below it, 233 is beneath that. And let's look at the NASDAQ on the daily. Trend-based fib projection, you wicked, of course, the 1272, right? Because why wouldn't you? The 1272 fell shy of your 200, 233. NASDAQ's trying to hold this base as well. It makes sense. Like I said, tomorrow may be rough, but I think the short trading weeks over the next 2 weeks, we could see some more volatility to the upside. Really would like to see some of our shorts get set up at a higher level. Gives you more confidence that they will last, because I do believe we'll be coming down, resuming our primary downtrend that has been in place, guys, since January 4th in the S&P and since November of 2021 in Bitcoin and in the NASDAQ and in the Russell. Let's look at some targets or the MFI here. MFI just bouncing around the median line. Big volume pickup, obviously, on the selling. If we look at where we're trading at, 11,348. You can see you have beneath you 11,212 and 11,081. You really want to hold in this level, maybe bounce off 11,212 just to have any chance to come back up. Notice you are on top of Wyckoff, just making these structures. I guess you could have a double top here, found support, bounce up, roll back over, failed pivot, you could say. Again, failed pivot, you could say. And then you capitulate it here on this candle. Is this all she wrote, guys? We shall see. I think we'll have a lot more clarity next week. We're at levels where we need to hold support, or very close to levels we need to hold support on all these indices. And of course, keep your eye on the prize, which is Bitcoin and the Russell. They have the same pattern, and those dates are coming soon. They've provided excellent trades. Will that continue in the Law of Three fashion? I hope so, guys. Like and subscribe. I do appreciate it, guys. Leave your comments. I'll answer them as always. Take care, everybody. See you next video. Sunday kickoff show.